Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about should you buy stocks right now or should you wait for a stock market crash? So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel, and if you have any questions, let me know in the comments. So now, roll the intro, let's go. It's time, let's go. Come on, bam! So now a lot of people always ask me and they will pretty much say the same thing. Carter, should I buy stocks right now or should I wait for a crash? And honestly, I think there's a lot of things you have to understand before you make that decision. The very first thing is, what is a crash, right? You have to understand what a crash is before you can make that decision. Pretty much a stock market crash is when the general stock market, one of the indexes, falls more than 20% in value. Now, on average, this happens every 4 to 6 years. We saw it in 2020 and it was way overdue then. Now, during that time, the general stock market fell about 40% in value. And honestly, during that time, there's a lot of fear, a lot of paranoia. People just didn't understand what was going on. But historically, we have very, very fast recoveries with the crash. Me personally, I think that's just because we see a lot of opportunity in the market, so it gets bought up very, very fast. Now, at the end of the day, is a crash bad? Absolutely not. There's a lot of things you can do to prepare for it, and there's a lot of things you can do during it to make a lot of money. But we'll get into that here shortly. First, let's talk about a correction that is more likely to happen in 2022. Pretty much a correction happens every other year, and this historically is pretty much when the general stock market falls about 10% in value. And me personally, I think that's what we'll probably see going into 2022 within the next couple of months, because we have very, very high inflation, and that historically has slowed down the stock market. Now, what can you do to prepare for a stock market crash? So me personally, I think there's a ton of things you can do. The very first thing you have to understand, number one, cash is king during a crash. You need to be able to buy stocks that are on for sale signs. Imagine if you always wanted to buy a house and you kept waiting, and then all of a sudden that house that was once $100,000 dropped to $50,000. You would be buying as much houses as you possibly could if you could afford it. Now, the biggest thing during a crash is getting that $50,000, getting that cash. Cash is king. So what I always do is I will hold bonds, and I will honestly hold them throughout the year, throughout the couple of years that we've seen that the stock market doesn't crash. So what it does is the bond market has historically gotten about a 5% return plus dividends. So you're still looking at about a 6 to 7% return on your money, and it doesn't really fluctuate as much, which is awesome. So then when you're holding all of that money in the bond market, the stock market falls. Historically, bonds actually go up when the stock market falls. Then what happens is I sell those bonds at a profit, and I will dump more money into the general stock market. So once it recovers, you make a lot more money then. Now, the absolute biggest thing for crashes, this is just a massive for sale sign for stable companies. Riskier companies will fall more than the general market, but historically stable stocks do very, very well. And dividend stocks don't fall as much. So that's another thing you can do to hold in your portfolio is dividend stocks, just because people are less likely to sell those stocks that are paying them cash flow than stocks that aren't. Now, to answer your main question, should you buy stocks right now or should you wait for a crash? There's this quote you need to know. It's called, "Time in the market is better than timing the market." Let that sink in. Time in the market is better than timing the market. So what this means is during all of those crashes right before that 2008 crash, if you'd have bought in 2007, you'd still be up handsomely on your money right now. If you'd have bought in 2019, right before that 2020 crash, you'd be up handsomely on your investment. So historically, guys, time in the market is better than timing the market, especially for a long-term investor like myself. Understand this quote too. 90% of hedge funds can't beat the S&P 500. 90%. Okay, so of that 10% that beat it, 5% don't beat it the following year, and then that other 5% are those, world-class investors, Paul Tudor Jones, Ray Dalio, Warren Buffett, the guys that you have to have billions upon billions of dollars for the average guy to talk to them, you won't be able to. So the biggest thing, most people, 99.9% of people, what they should do for their investment strategy, $100 a week, $100 a month, whatever you can afford, invest it in the S&P 500, and then dabble with some blue chip and some riskier stocks. Very, very low, and you guys will become wealthy. I could almost guarantee it. So guys, timing the market is very, very hard to do. You know, these hedge funds try to do it every single day and they don't even beat the market. So it's better to just be in the market, hold it for the long term, and just go from there, guys. So I hope you guys enjoyed the episode. I hope you guys learned something new. If you did, hit that like button. It really, really helps me out when you guys do that. So we will see you later. Remember to stay happy, stay positive, and stay safe. Take care.